Mehrab Irani is joining us. He's the top boss at Tata Investments. Mehrab, great to see you as always on on Diwali. A very happy Diwali to you, your team, your family, from everyone here at NDTV. First up, how's the mood there really?
Good evening, Prashant. The mood is really fantastic over here. First of all, I would like to wish you, all your colleagues at NDTV Profit, all your viewers, the investors, and all the public of India at large a very happy Diwali and a very happy, prosperous Samvat 2072 and a prosperous New Year. As you can see, the mood here over here is simply fantastic. I think people have come with their kids, with their wives, with their families, and I think the mood is totally festive. And as we know that BSC goes long way back, and there is a lot of tradition over there. Murat is a very auspicious occasion, and everybody wants to do some trades, buy something, which they believe would be an auspicious trade, an auspicious buy, and would create wealth over the longer term.
Mehrab, though recently it has kind of gotten quite tough, right? I mean, especially even sectors like pharma getting beaten up quite a bit. The big ones, Sun Pharma, Dr. Reddy's, etc., getting beaten up a little bit. And those join the ranks of other so-called fallen names.
Yes, Prashant, you are right. Recently, it has become slightly tough. Certain large pharma companies also have been facing the US FDA, etc. problems, which if you see few quarters back, only the mid-caps were facing. But now even certain large caps and certain big names are also facing. So yes, even if you see the other, which is the safe haven, say the FMCG sector, that also the second quarter results were not so encouraging. There was volume decline in a lot of companies. There were marked slowdown in the sales in a lot of these FMCG companies also. Today, their margins are also at multi-year high because the commodity prices have fallen. The gross margins are at multi-year high, and therefore their their profitability is sustaining. But they are all suffering from the volume side. So yes, it has become a little tough to invest in those traditional safe sectors also, which do not offer any valuation comfort at this point of time.
Mehrab, to your mind, what makes the most difference? Out of all the FDI sectors which were relaxed, what makes the most difference?
I think it is particularly positive for the media sector, certain broadcasters and even the radio company, and also for the defense sector. I think there will be some good opportunities within those sectors if the macro things also pick up. Particularly like you mentioned, I think ENIL, I think the radio sector, the phase 3 auctions have also been done, and they produce a lot of good free cash flows. The EBITDA margin in this business is very high. It's almost 54-55%. And with this increase in the limit, I think it should help that sector. Though it's a very small sector and hardly represented in the market, but I think it should benefit that sector as well.
Something like a defense. Now, if we dig a little deeper, the question remains: like, why would someone come in here for 49%? Transfer and that too bring your technology here. If you've got a really lucrative technology for which there is a fair bit of demand worldwide, why would you want to still come in with only 49%, Mehrab?
Yeah, Prashant, I completely agree with what you are saying. I think yes, that concern will always remain, and a lot of changes have happened in that sector also. I think a lot of certain new players are even certain new Indian players are trying to enter that sector recently. So I think yes, once the government spending etc. picks up and more capex happens in that sector, certain opportunities will come up in that sector. But yes, the question remains about why some foreign players should come in that sector at this also.
Yeah. Mehrab, if you look forward a little bit, where do you find, where are you seeing opportunities? What's your thinking like? I mean, you run a large amount of money, so it's kind of difficult to really sort of take very, very offbeat calls, right? Or rather very small names where there isn't enough liquidity, etc. But what are you doing, really? Yeah.
Yeah, Prashant, if you see there is certain kind of dichotomy between the macros and the micros. If you see the second quarter results, the top line actually fell by around 7% for index companies, while the EBITDA grew by some 6% and the bottom line grew by 2.5%. Today, if we see the raw material prices have corrected significantly, gross margins are at all-time high. So either somebody can interpret it positively or negatively. Somebody can say, okay, today when even the raw material prices are low, when gross margins are high, still there is no actual increase in the bottom line or the profitability of companies. Or we may look that way that today, okay, the commodity prices are low, margins are stable, and once the capex cycle picks up, there will be increase in the sales, and which will give a lot of delta to the profitability. Also, if you see, there is some kind of dichotomy, as I said, between macros and micros. Today, if you see, the macros have become quite good. Today, after 125 basis point cut in repo rate, the real interest rates still remain quite low. Inflation today is quite low. Today, consumer price inflation is between 3 to 4%. So, macros are looking very good. The valuations are
okay. So where are you looking specifically?
Yeah, so today I think we would be continue to be more bullish on private banks. I think they still offer a good opportunity. And after this correction which has happened, I think valuations have become decent in a lot of the large private sector banks. Yes, certain asset concerns have come up in last quarter in some of the banks. But I think overall still their growth remains. And once the capex cycle picks up, I think they should be able to witness good credit growth, maybe 14 to 15% plus credit growth can be expected with maintaining net interest margins and stable asset quality. So that would be one positive sector. I think another would be the auto sector. I think clearly that has been doing very good. The two-wheelers continue to remain good. The passenger vehicle numbers have been very good. Even on the two-wheeler side also, if you see the management in the latest have given a guidance of maybe motorcycle may decline by 3 to 4%. However, I think still going forward the growth remains quite healthy, and that would be another sector, autos, particularly the passenger vehicles and the two-wheelers, where we will continue to remain bullish. Another beaten down sector which I think we can look at is mining. I think there is a lot of concern around the metal sector, and that remains a concern because of the global cyclical slowdown. But if you see, a lot of the mining companies and a lot of the mining assets in India are available, some at very good valuations, and certain companies have good balance sheets. They have very less debt or almost zero debt. The debt equity is very good, and once the prices stabilize, I think they will be able to generate good profitability and good ROE. So I think certain mining assets are available at decent valuations where investors may look at buying into the new year.
So private banks, autos, and some certain mining companies, right? That's where you're focused on.
Yes.
Thank you very much, Mehrab. Great speaking with you. Happy Diwali once again to you, your family.
Yes, I once again wish Happy Diwali and Happy New Year to all your viewers and everybody at NDTV Profit.